All right, so this one is on the search for unrecorded liabilities. We typically would just call this the search. So if you hear that terminology or if I use it or whatever, then yeah, you can know that that means the search for unrecorded liabilities. All right, so without wasting too much time, I just need to give you a little bit of background on what a company does at period end in order for you to understand the test. So at period end for a company, maybe that's every month usually a company does a close, but for the audit period end, let's say it's 12/31, December 31st. So every first couple weeks of January for this company, they're going to have to scour their desks, look at open purchase orders, talk to vendors, bug their coworkers who can buy stuff, all that stuff, all those things to see what goods or services have been provided before 12/31 that weren't recorded as a liability as of 12/31. And so they do their best job to figure that stuff out. And sometimes they miss things. Sometimes an invoice comes in late or it just slips through the cracks or whatever. So that's what the purpose of the search is to find those unrecorded liabilities, stuff that they didn't find. And so in the client's final work product, right, they're going to have an AP account, an accrued liabilities account, maybe some manual accruals, whatever, to capture all that stuff. So we can't look in those accounts to try to find unrecorded liabilities because those are already ones that have been recorded. So it makes sense, right? We can't find what's not there by looking within the account. So we need to do a test in order to find what's not actually in the accrual account or the AP account or whatever. And so the main way to do this, the most common approach to doing this is just look at subsequent payments made by the company. So the company typically companies make weekly or biweekly or daily or whatever payment runs. So they'll just print a bunch of checks and they'll pay all those. They'll send all the checks to their vendors, and it clears the bank account within a couple days. So what we do is we'll start at any point, but we'll get a listing as the auditor. We'll get a listing of all the checks that were paid from 1/1 January 1st the next year, whatever, the day after their period, through the end of our audit work, and we'll just keep looking at those payments and getting support for those payments to see if, in fact, they paid something that was related to goods or services that should have been recorded as of 12/31. So it's a little bit of a cumbersome test, but you can find things because a client's not perfect. I'm sure you may have heard stories from your coworkers or whatever. I don't know if you've found something yourself, but it's definitely, this is a good test. Excuse me. So, step one, get their, what we'll call their subsequent disbursements detail or their check listing or whatever. And what that's going to be, it's just going to be a list of all the checks that were paid since the end of the period. So, it'd be like I said, our check run from 1/1 or January 1st through end of field work. And so let's say it's only January 25th right now and you're supposed to do the search. What you'll do is you'll get a listing through January 25th of all those checks and then make selections from there. And then as the weeks go by, you're going to keep getting incremental listings. So let's say you went from 1/1 through 125. The next week, you're going to go from 126 through 27 or whatever the date would be. And so you do that until, February 28th or March 15th or however long you have. And so you just keep getting these subsequent check details. Now, your team itself, probably your senior or whatever, will actually scope like which selections to make. It's usually based on a dollar threshold, so it'll be like above your materiality level or above your posting threshold or whatever. And you just say, okay, this check listing has 50 checks ranging from $1,000 to $100,000. And let's say your threshold was $50,000 and there's 20 checks that were above $50,000. You get you get the check, the actual check for those 20 payments, and then you get the invoices that support them. Some teams will let you do this a little differently, because you're probably thinking right now, you go, well, okay, well, if I get 20 checks that paid that paid maybe 10 invoices a piece, you're going to be looking at 200 invoices, or whatever the math was there. You're going to be looking at too many invoices. And so some teams will let you take the highest, like 5, like the largest 5 invoices paid on a single check. Some excuse me. Some clients will allow you to, they have the ability to run a check listing in at the invoice detail. That gets a little tricky, because you need to make sure that the query or report they're running to give you that information is complete and accurate, because you really shouldn't be selecting search items based on invoice. But there is a way. There is a way you can do it if the circumstances are right, if the client system abilities are there, or if maybe they just pay a single check per invoice or whatever. But you just need to scope you need to scope the subsequent checks to make selections. And so getting back to that, your support's going to be bills of lading, invoices, purchase orders, check copy. Those are the big ones. So you just get those 4 things. Again, you get the bill of lading where it's applicable. You get the vendor invoice. So the other company, not the company you're auditing, but the company that charged the company you're auditing, you need to get their invoice. And then the company that you're auditing, they have an internal purchase order, the thing they sent out to say, hey, we want these services or goods or whatever. And so you need to look at those dates for the service period or the goods period. So if it's if there were goods that were provided, then that's when the bill of lading comes in handy, because you can see, hey, what date were these goods actually delivered to the client? And if they were delivered before year end, so let's say they were delivered on 12/15 and your client's at 12/31 year end, and so the goods were delivered on 12/15, then you would expect to see that invoice or that purchase order, or I don't know what the unique identifier is going to be, but you would expect to see an amount for those goods accrued in their AP accrual. If you don't, that's potentially an exception. But sometimes with these manual accruals and one-offs, they have them in kind of weird accounts, not their typical trade accounts or whatever. So they'll have like a manual accrual where it's simply like, yeah, we bought all these things, and here's a listing of all the stuff that we have absolutely no support for as of year end, but we know that we bought stuff and we know what the typical price is. So anyways, that's the easiest part of the search. That's kind of the high level. You get a check listing, make selections, keep updating each week, and you make sure that the goods are appropriately accounted for. And I guess I should give you kind of the opposite case, right? Let's say that the goods or services were provided after year end. Then you would expect that those accruals wouldn't be in the prior year or in the year under audit's accrued listing. So to put that in an example form, let's say they paid a utility bill on February 15th, but the utility bill covered January 5th through February 5th. So that's outside of the year under audit. So you would not expect to see that utility bill accrued for in their year-end AP listing or accrueds or manual accrueds or whatever. So you can get into trickier circumstances when let's say they have a utility bill that's from 12/5 to 1/05, like right December 5th through January 5th. That can be tricky, because then only a piece of that bill should be accrued. And so that's usually when you have to talk to the client and be like, hey, where's this accrued, and where's your calculation to show the apportionment between FY under audit, fiscal year under audit, and fiscal year kind of future year, let's say, that'll be under audit next year. So again, if you guys want the steps laid out again, step 1, get the subsequent checks listing, test it for completeness. I'll get to that in a minute, but get the subsequent checks listing, test it for completeness, talk about scoping with your senior or whoever, your manager or whatever, get the supporting details, and just keep testing. It's kind of it's a weird one that doesn't really go away till the end because you have to keep updating this test. Luckily, typically your team will increase the scoping threshold. So maybe your first 2 weeks, your sample size will essentially be a lot higher than your last 2 weeks because we start to lax a little bit towards the end typically because we wouldn't expect anything. The risk of an unrecorded liability kind of starts to go down as time goes on. So if you're 3 months out from year end, it's more unlikely that there was under accrued amounts in the year under audit. So usually you increase your scope. So if really you're only going to look at checks over like $1 million or 500,000 or whatever. Anyways, testing completeness. It's a little bit all over the place, guys, but we'll bring it all back home at the end. Testing completeness over a check listing can be done a handful of different ways, but the most common way is to look at the check numbers and just see that they're in chronological order. So when you get that detailed listing, hopefully it's in Excel, and you see that the checks are all 5479, 5480, 5481, 82, so on and so forth. You want to make sure that there's no breaks in those checks. And if there is, if it goes from 5480 to 5482, then you need to ask the client and get support for that voided check that would be 5481. And that kind of helps you with completeness. The other piece is you want to get the client's prior year listing, or you can get the last week of the year's check listing, and make sure that the last number they used in the year under audit was the number before the first number used starting in, let's say, January. So let me give you a better example. Let's say on 12/31 their last check number was 5430. Then on the check listing that you get that starts on January 1st, you would want it to start with 5431. And then if there's a difference, you just get the voided check or figure out what's going on. Typically, there's an explanation. I haven't seen a break in checks issue before where there's some unpaid checks they weren't listing, but anything is possible. So, excuse me. And then a lot of clients will have, they'll make payments through wires too. So that's kind of another intricate part. Not all wire listings are chronological or sequential or whatever. So a quick way to test those is just to take their listing they give you. Let's say they said, yeah, in the month of January, here's the list of all of our wire numbers. What you want to do is check that against the January bank statement and just see, in February, and see if those were, if those were all the wire numbers. Wires are pretty easy to pick out from a bank statement detail. They're usually fairly unique numbers, and they're kind of segregated within their own section. So a lot of different tricks. To do that, hit me up if you want specifics. I know you guys are probably all in a rush, so this one's gone on long enough. Hopefully you have a place to get started. Just to recap, somebody tells you, your senior tells you today, hey, you got to go you got to go do the search for unrecorded liabilities. Say, okay, do we have check listings? Once you get the check listing, scan for completeness through a sequence check. Get the prior year listing to make sure that there was no gaps in checks. And then talk to your senior about scoping. Once they give you the number, you scope your balance, make your selections, and you wait for the client to get back to you. So that's pretty much it. So hope you guys enjoyed. Hope this helps. Let me know. Feedback. Any feedback is appreciated. Feedback can be given on our website through our forum. You can hit me up at the AuditCast on Twitter, at the AuditCast on Facebook, anywhere. There's an email. I think it's at theauditcast@gmail.com. theauditcast@gmail.com. Any way you guys want to reach out, please do. Always looking for good feedback. Take care, guys. Later.